The founder of Fintrekk Capital, Amit Kumar Gupta, joins us this morning. Amit, good morning. What are you making on the mood of the market? We saw a slight correction yesterday. Would you call it consolidation now? What phase of the market are we in right now?
Yeah, hi Kartik. Thank you for having me. I believe there is a little bit of consolidation. Obviously, the liquidity situation has improved quite a lot over the last 45 days or so. So, despite all the Trump tariffs, the Q4 earnings going a little under expectations, my sense is that we are sort of in a dichotomous situation where India is the favorite, macro darling in otherwise a turbulent world, but earnings recovery remains very, very stock specific. So if you look at the fourth quarter earnings so far, they have been up about 7.5% year on year, but
Right.
that's mainly driven by banks and lending institutions. So there are a lot of parts in the market where the earnings recovery is not there, hence they are sort of consolidating.
All right. Amit, I want to draw your attention specifically to the IT pack. And this is the IT pack is something that we have seen which has been extremely fluctuating over the last maybe 10, 15 days or so. There are days when it climbs up about 1%, 1.5%. There are days that it comes down by a similar margin. And the trend that seems to now be noticed on the IT sector stocks, especially the ones on the Nifty 50, the ones that we are flashing on the screen right now, is that absolute direct correlation with what is happening in the US is no more reflecting on IT stocks here in India. Why is that so?
Yeah, I think the Nifty IT do reflect what is happening on the Nasdaq, but
Okay.
not always. The reason for that is probably whenever something negative happens in the global world, then they sort of uh, trade negatively. And what we have also seen is that at certain point of time, market is looking for some sort of a defensive approach. In that case, the valuations are reasonable on the IT pack. So you see a upswing, but it is still down 25% from the top, but it is also up about 15% from the bottom. So my sense is that there will be a lot of consolidation in the IT sector in general, especially in the IT services pack, because the Nifty IT index consists of mainly IT services. So there will be a lot of consolidation till there is much more clarity on the global growth.
All right. And what about the auto stocks, Amit? Because auto stocks is also an important theme. And as of now, any FTA, any trade deal, any negotiation that India is involved with, whether it is with the UK, whether it is with the EU, or even with the US for that matter, there is pressure on India to cut tariffs on auto imports, and auto exports for other countries should be facing lower tariffs when they come to the seaports here in India. How do you think for, let's say, the medium to long term, will the India auto story play out if India were to give into pressure like it has already done with the UK and cut tariffs on auto? Is this going to attract a flurry of automobile brands coming and getting rid of all the Indian competition?
Not in the near term. That may happen in 2 3 years, but I don't see too much of an impact. Immediately. Moreover, the auto companies would also export, so it will sort of balance it out. But the situation, the macro situation currently is actually favorable for equities with the rate cuts happening. Most probably by the festive season starts, we'll have the rate cut passed on to the consumers. Crude oil prices have also come down. Rupee has also appreciated. So I think all that would lead to some sort of a gain in the bottom line of most of these auto companies. I'm not too negative on the auto pack as such, but as far as the the tariffs situation is concerned, it's a developing situation. We have to see what kind of deals are uh, fructified with the US especially. But there could be chances of tariff cut there as well.
All right. I want to spend a minute or two and pick on something you said, Amit, just a while back, that even the export market for India's auto companies would open up. Is that story likely to be more restricted to auto components as opposed to real four-wheeler, two-wheeler brands? Because in the past also, we haven't really seen companies like Mahindra and Mahindra, or even Tata Motors for that matter, get great reception in markets like Europe and the US. So do you think that tariffs being cut will be a positive perhaps for India's auto components which get exported, but perhaps a negative for the for the four-wheeler companies here in India?
Yeah, I mean, auto components would be a preferred choice over auto companies or the OEMs because most of the OEMs have multiple moving parts. So, for example, Mahindra and Mahindra, they do tractors, they do SUVs, they do other components as well. I would prefer to bet on an auto ancillary which can cater to multiple OEMs rather than betting on a single OEM. So it's just more risky with the global trade war happening, and constantly we are seeing changes in the trade policies of various countries. Auto ancillaries would be preferred over auto components.
All right, let's talk about the banking sector, Amit. With interest rates now likely to be cut again by RBI in its June Monetary Policy Committee meeting, what happens to net interest margins? Do you think there's now going to be, with a cut in interest rates, there's going to be greater demand for loans from banks and NBFCs? How's that story likely to pan out, let's say, over the next 3 to 6 months if RBI does go ahead and cut rates, as the expectation is in the first week of June?
So I think the NIMs will still remain compressed for a couple of quarters as the market adjusts to the earnings projections for the next couple of years. My sense is that consumer loans would go up with a cut in the interest rates, and there could be potentially a couple of more interest rate cuts by the RBI in the June and the August meeting, or probably October meeting as well. So consumer loans can pick up. I'm not so sure about private capex getting picked up very quickly. The whole bet about the lending financial is that the growth will actually increase. But when you see the demand scenarios in a lot of these companies who are planning to do private capex, they're just holding back because of the global situation at this point of time. So it can happen, but it may take more time than expected. We are neutral about lending financials as such. We believe that there could be opportunity down the line, but not immediately.
Okay, and finally, I also want to talk to you about consumer products, FMCG, the entire consumer non-durable pack. And with the sort of backlash that we are seeing on distributors and retailers wanting to boycott Turkish products, etc., I'm sure they don't make a large chunk of what we see on retail shelves. But there are two, three factors. One is, of course, what is happening geopolitically. The other is that April was meant to be the month when the finance minister's increment by way of income tax relief would have kicked in. So those salaries now coming in the month of May, a better mood for consumption when it comes to FMCG. Do you think the FMCG sector is poised to grow from here?
So a couple of things. I think the bans, whatever products are being banned in via Turkey or even other countries, I don't think that will impact so much because the percentage is very less than probably 0.1%. And there are enough alternatives to that. So I don't think that will happen. The consumption, should pick up with the new tax cuts, with the RBI cuts being passed on. But having said that, most of the FMCG pack which is listed in the index, that is very expensive in the valuations. So there are newer opportunities, like food delivery, uh, etc., which are coming up, which are providing a very strong competition to that. Uh, Moreover, there are a lot of unlisted and startup brands which are coming, which are directly challenging to these FMCG, traditional FMCG companies. So my sense is, given the high valuations these lot of FMCG companies are commanding, I'm not very comfortable buying them. I would rather buy on a competitor which can be increase market share much more rapidly. Not very keen on buying FMCG companies from the index.
All right. But overall, Amit, if we were to sort of, pin our hopes on the broad indices, the Sensex and the Nifty right now, what is the trajectory? Because we haven't really been able to identify how much of markets have factored in the external tariff threats, which are now on a hiatus. How much of a trade deal coming through has been factored in, and it seems that at least the tension on the border seems to have de-escalated. So overall, where is the trajectory of the market here on, and how long do you think before we come back to the September high that we had seen maybe on the 26th and 27th of September last year? Are we on that track to get there, or do you think markets are still battling some sort of fear of the unknown and still a little pessimistic about how the world order and India's own political story, at least on the tensions with now Turkey, even though Pakistan ebbed, are we still sort of a little jittery about where we feel the markets would be headed?
So, a couple of things on that. One, I think the escalation on the border that would probably stay, and that would impact the businesses all around, impact the economy as well. Whether it gets escalated or remains as a status quo, that we have to see. But that's a risk at the back of the mind of investors, and that's why you are also seeing a lot less retail participation, apart from probably mutual fund SIPs. The direct equity investing, which was happening very aggressively till about January, that has really come off because of this Trump war and because of the geopolitical situation in the last 30 days or so.
Right.
So my sense is that it's a developing situation. We have to see, how it unfolds over the next 45 days or so. Remember, the 90-day deadline, expires sometime in first week of July, around 10th of July, I believe. There could be still a lot of investment strategy changes which can happen depending on how the situation unfolds. Remember, nobody was really participating in the defense stocks, but because of the geopolitical situation, again they have gone up. So
Right.
market will keep on, I think, throwing these kind of surprises. It's much more important to stick with your investment strategies and with your stocks. I don't expect a new all-time high very quickly, at least not in the next couple of months. My belief is we'll consolidate, and probably in H2 only of the current year, we'll see a up move if things pan out positively as expected.
All right. Now, apart from the talks, the negotiations with the US and the EU right now, and of course the RBI rate decision which will come in June, are there other factors that markets are watching out for, waiting to get some update on before we get into that hopefully that bull run period again? What are the external or the domestic factors that markets are really waiting for by way of news flow, which will determine the mood from here?
Right. So I think one positive thing which has happened is the liquidity infusions, especially by the RBI. We have also seen Fed, also injecting a lot of money to keep the bond market stabilized. We have seen rate cut from ECB and some other central banks as well. For me, the managing the fiscal deficit will be important from here. If India is able to do that, then market will take a lot of hope from that, and they can push in that form. Remember, government will be getting a lot of dividends from the cash-rich PSUs. RBI is expected to give a big dividend more than last year. So we are expecting somewhere $2 billion, more than $2 billion of dividend this time around. Again, there could be instances of higher taxation on the income taxpayers going forward. There are a lot of things, and also divestment opportunities are there for the government,
Right.
because a lot of the share prices have gone up in the PSU space. One new thing which has come up is the SEBI's new consultation paper, where a lot of PSU companies will be delisted since they are not able to meet the MPS, the minimum public shareholding norms. And I think that is very important, because suddenly you can get 5-10,000 crores by selling a PSU, doing just a delisting of that company. So I think there are a lot of opportunities, but obviously the tariff thing needs to be clarified over the next couple of months. We have to see, how much, what are the rates finally we settle at,
Right.
and accordingly, adjust investment strategy according to that. But overall, I think it's a positive situation. So we are cautiously optimistic on the markets.
Cautiously optimistic. Well, that's the word coming in. Amit Kumar Gupta, thank you so much for taking the time and joining us here on News 9.
Thank you, Kartik, for having me.